actually recently attended a short sale training at my local realtor association.
Hmm.
And the lady who was given the class, she'd been in the business for over 30 years. And she said, during obviously we've been through a few crashes. And she said that this time is not going to be like back in 2008. She said,
Well,
that's what she told me.
yeah, a lot of
Oh,
people are saying that, and I tend to disagree because, first of all, I pay very close attention to the economy and what drives real estate, and the majority of the real estate community does not. And they're looking at mortgages as being solid. Well, that's not the problem at all. The problem is inflation, and people don't understand inflation and how it works on the economy. Inflation doesn't go away on its own. Even though we have a need for more housing to be on the market, there's not a lack of housing, there's a lack of housing inventory. That can quickly change, and it already has changed considerably in the past month. Even the past 45 days, we've seen inventory spike. Days on the market in a
yeah.
lot of places are over 2 months now, whereas 2 months ago they were 30 days. So that's already changing. Prices have come down, but they've only leveled off. And what's happening is institutional buyers and investors are buying up properties for rentals, and the buyers are still that are left are still trying to buy while they can. But where we're going in the future is interest rates are going to continue to go up, and it's affecting corporations. That you see it in the stock market. So when you look at the stock market that's been crashing all year, that's corporate losses. That's their earnings taking a hit. And when we're in this kind of an environment, the interest rates are going to continue to rise. Inflation is not going to go away for a long time. And what happens next is the corporations can't continue to take these kind of losses, and layoffs are where I'm looking at the next phase to happen. And that's why I was saying about, look at the January numbers after the Christmas season, because, that's what most companies rely on for most of their profits. And when the holiday numbers come back and the corporations see that their profits are nil or negative, that's when they're going to have to lay people off because they can't work on those margins. They have to make a profit. And, you can just see it in the stock market happening all year. But most people don't understand that, how the economy works and how inflation affects it. Inflation is going to be here a long time. I guess what was good news and said that they're not going to put the brakes on interest rates. And the only way that you can stop inflation is to, raise interest rates. They have to slow down the rate of the economy. They have to put the brakes on people spending money. And the only way to do that is to cause a recession. And when you have a recession, well, that creates job losses. And that's something that once that whole ball starts rolling, you can't really stop it. How do they stop it? They would have to raise interest rates again and create a more seller-friendly environment. Well, if they raise interest rates, then that creates higher inflation. But they can't do that because higher inflation will spin out of control and nobody will be able to afford anything if they let inflation go crazy. So the Fed's in a really bad place, and they're the only ones that really have much to do with it. And the only tool they have is interest rates. So they have to raise them, and they can't really reduce them, nothing significant anyway, without risking inflation taking off. Inflation, basically, we're at 8.6. Last month was 9.1. You can't have almost 10% every month of price increases. That means that be over double at this time next year, and then double again and double again. Where would we be if we're spending $8 on bread, in 2 years? It's just not sustainable. It can't happen. And that's why the Fed has to raise interest rates enough to stop it. It's I can't see the future, of course, but I don't see anything that is going to help the economy. A lot of this was due to the printing of money over COVID, but it was happening before, and COVID just exacerbated it, made it much worse. It's very detailed and complicated, but when you look at, how inflationary periods are, everyone is different. And, if it weren't for this inflation being so bad, yeah, I'd probably agree with the other short sale person that we won't see it. But the inflation is very bad right now. And it's not really getting better just because it went from 9.1 to 8.6. It's not coming down. That's just, kind of a leveling off for that period. And it's going to continue to spike. So we have month over month, 8% price increases that, again, you can't have that happening. If you look at history, that's what happened in Weimar, Germany, in the 1920s. Hyperinflation took over. And by the time Hitler came to power, they were burning money in trash cans for warmth. I know that's extreme, but that's what inflation does. It just erodes everything in the economy. It makes money worthless. And if it keeps going, your dollar is going to be worth 20 cents in 2 years if they allow it to happen. And they can't. So there's just really no way around it. I just can't think of any way for them to be able to stop inflation without it, turning into a bad recession. I watched the top economists, and it's becoming apparent to most of them too that there really isn't much of a choice other than cause a recession to stop inflation, because the alternative is let inflation go, and then that gets really bad. Then what? Then you have to really get aggressive. And nobody wants to raise interest rates to 20% again like they did in the 80s. But if they allow it to happen, that's what they would have to do. And if they went from 5% interest to 20% overnight, well, everything would crash, of course. So, the Fed's trying to walk a fine line that I don't think they're threading a needle without a hole. It's a very difficult spot that they're in.
Definitely. Well, we'll wait and see what's going to say tomorrow, but I don't think there's going to be any change. They have a meeting tomorrow. So
yeah, I heard that. I'm not sure, I don't know when they'll release the meeting notes. They're in Jackson Hole, aren't they?
Right.
Yeah, I look forward to seeing the notes on it. But, the Fed always kind of talks out of both sides of their mouth, and they kind of have to, because they can't come out and say how bad it really is, because then the stock markets would tank right away. But economists are now really coming out and saying, this is a really bad spot. And nobody's really saying that we're going to have a big crash, but I know it's on their minds. And, I'm not going to say we're going to have a big crash either, because maybe somehow the Fed pulls it off. But I just don't see how it could happen, especially honestly, America is fighting back. They raised interest rates 75 basis points last time and rates went down. That was just slapping the Fed in the face. And that made them angry too. The Fed, that was just saying, we don't believe you, Fed. We got this. We know what we're doing. Well, the Fed looks at that and says, well, okay, you know what we're doing. We can't allow that to happen. So they have to raise rates higher. If they come in lower the next time, it'll be 50 basis points, and only because we're coming into the midterm elections, and that would be political pressure. Otherwise, it's going to be 75 or 100 basis points. It should be more. Again, they're walking a fine line. They can't raise it too much to where everything crashes, but so far the economy just doesn't want to give up. But right now people are starting to pay for it. People aren't able to afford their groceries, and that's going to get worse. And right now the lower class is hurting, and very soon the middle class will be hurting, and it's just going to go right through everybody if they let it go. So I don't know. We'll see where the future goes, but I think that we are going to have a considerable amount of REOs and short sales. But, and that's why I think that after the holiday season, whatever those numbers come in from the holiday earnings, that is going to have a direct effect on what the corporations do to their workforce. And if they're bad, they have to lay people off, and that's where it begins.